Bitcoin is a perpetual motion machine. The Bitcoin hash rate is slowly climbing to pre-China ban levels, and the service continued uninterrupted without a hiccup. Such is the power of well-placed incentives. Pantera Capital CEO Dan Morehead adds one more factor to the equation. The Bitcoin network has recovered 68% of the drop in hash rate that our difficulty model attributed to China's ban, likely in places with cleaner energy. In the company's newsletter, Pantera fleshes out the argument. Although difficult to know with certainty, it seems very likely that much of the transition to renewables is well underway. Here at NewsBTC we've determined that China's Bitcoin mining tended to go to provinces with abundant green energy. Bitcoin incentivizes that. The Bitcoin hash rate tends to go where the energy is cheap. We've also determined that the environment doesn't seem to be the reason for China's Bitcoin mining ban. The fact that the electricity for crypto mining in Sichuan came from clean hydropower meant that many thought the province would be a safe haven for Bitcoin miners. They're closing these mining operations for other reasons altogether. It's also important to remember that China's Bitcoin hash rate dominance was already on decline before the mining ban. According to Arcane Research, CBECI numbers say that China's share of total Bitcoin mining power has declined from 75.5% in September 2019 to 46% in April 2021 before the restrict. That figure is much lower than the older estimate of 65%. That's a sharp decline. Why did China's miners lose so much ground before the ban? None of this invalidates Pantera Capital's original thesis, though. The transition to renewables is well underway, that certainly seems to be the case. And the Bitcoin hash rate keeps climbing. Another interesting idea present in the mentioned newsletter is this one: Bitcoin has a built-in mechanism to reduce energy consumption over time. The number of Bitcoin issued in the every 10 minutes block reward is cut in half every 4 years. Ceteris paribus, the amount of electricity Bitcoin consumes will be cut by 50% every 4 years. For comparison, the Paris Accord only requires 7% cuts every 4 years. Of course, when related to fiat currencies, Bitcoin's price fluctuates. That extra money could bring even more competition and a Bitcoin hash rate increase with it. Taking it into account, Pantera poses, perhaps a more realistic scenario is if the price of Bitcoin were to double every 4 years in parallel with the halvings, putting Bitcoin at $320,000/BTC in 2032, electricity consumption would be no greater than it is today. Another point that the news